If you check the amount of gold and silver, I think silver is at record highs above 500 million ounces, and gold is slightly below that, but it's still higher than it's been in since the 1970s until COVID. It was announced that there were gold tariffs. All of a sudden, there was humongous volatility in the gold market. It went to new all-time highs, and then down $100, and then up another $100, and the news kept changing. And this is not healthy for any market. I would like to see gold and silver head up higher and higher, faster and faster, but I don't think a tariff is what's going to get us there. It's just going to be the fiscal situation and the monetary situation.
Silver is pausing after a sharp pullback, with prices at $37.86 following last week's break below the ascending channel. In the near term, the focus is on reclaiming the 50-period simple moving average at $38.03. A former support level now acting as resistance. The broader picture remains cautious. While silver has held above key support at $37.31, it has yet to show the conviction for a sustained rally. This period of consolidation comes just ahead of U.S. inflation data that could set the tone for precious metals in the days ahead. Rafi Farber, a longtime advocate for hard money, notes that silver holdings have reached record highs, exceeding 500 million ounces. In contrast, gold holdings, although slightly lower, remain near their strongest levels since the 1970s. He points to recent tariff headlines as a textbook example of how fragile liquidity can spark outsized volatility. Gold surged to record highs, then fell $100, and subsequently rebounded by another $100 in rapid succession as conflicting news swirled. In his view, such instability is unhealthy for markets, and while tariffs might accelerate certain moves, the fundamental drivers will be the underlying fiscal and monetary conditions. The gold market reflected Rafi Farber's concerns on Tuesday, posting only a slight gain as attention shifted from tariff drama to core economic signals. Spot gold rose 0.1% to $3,347.34 an ounce after U.S. inflation data came in marginally below expectations, reinforcing bets on upcoming Federal Reserve rate cuts. The dollar weakened, making bullion more attractive to overseas buyers, while the consumer price index increased by 0.2% in July and 2.7% year-over-year. With political headlines fading and monetary policy once again in focus, both gold and silver stand at a pivotal juncture, and the coming data could chart their next significant move. In this update, we break down Rafi Farber's latest insights, not only on silver's short-term technical picture, but also on gold's volatile reaction to tariff headlines, the underlying liquidity dynamics in precious metals, and the fiscal and monetary backdrop driving the bigger trend. So stay tuned. If you value precise, data-backed analysis on precious metals and the forces shaping them, be sure to like this video and subscribe to the channel for more in-depth weekly coverage. We appreciate your support and hope you enjoy the discussion.
Yeah. So I think we're about 4 months in, and this is about as long as consolidations have been since the beginning of 2025, which is when Trump got elected. So I mean, the practical application of that, or the practical effect of that on the gold market was like a whole bunch of gold was going to be imported into the United States because of tariff fears. And then we have, are there gold tariffs? Are there not gold tariffs? One day there are, one day there aren't, another day there are, and then Trump comes out with an announcement that there aren't. And in my opinion, it's not that the tariffs would have an immediate impact on gold and silver, even if they were applied or not. They would just have an effect on gold trading liquidity. Because what provides the liquidity is the spread between London and New York, right? So a tariff, if you're gonna have an artificial price for gold because of a tariff that applies when you import gold into New York, then that spread between London and New York goes away, and therefore the bullion banks, and we like to knock the bullion banks all the time, and I would agree with that. They're not legitimate, but it's not their own fault that they're not legitimate. They're just operating within a fiat system that exists on top of them. You could
Right.
say they benefit from it, fine, but still they have to operate within it, whether they benefit from it or not. So the point is that tariffs would hit the liquidity negatively that the bullion banks provide to the gold trading market. So the effect being that if there is a reason for other people to buy gold, then there will be less liquidity with to operate with. So the moves in gold and silver would be much more volatile, and that's what we've been seeing. And on the day that it was announced that there were gold tariffs, all of a sudden there was humongous volatility in the gold market. It went to new all-time highs, and then down $100, and then up another $100, and the news kept changing. And this is not healthy for any market. I would like to see gold and silver head up higher and higher, faster and faster, but I don't think a tariff is what's going to get us there. It's just going to be the fiscal situation and the monetary situation, aside from the tariffs. The tariffs are just an outside annoyance that we got to get around. So I wouldn't be too encouraged that tariffs are what's going to get us to the end game. They might speed it up a little bit, but other things are more important than that. If I were a central bank and I wanted to hold gold, why would I hold it in New York?
Right.
Like I would hold it in my vaults, in my central bank vaults in whatever country I'm in. I wouldn't stand for delivery in New York. So the only thing that I could see that parties that would stand for delivery in New York and hold the gold there, because we're not seeing gold and silver drain out of New York. They're still in the vault system. Like
Right.
they could be for registered for sale against contracts, or they could take them out, but they're still in the vaults. They're not moving anywhere.
Right.
Like if you check the amount of gold and silver, I think silver is at record highs above 500 million ounces, and gold is slightly below that, but it's still higher than it's been in since the 1970s until COVID. So who if we just reason out in our brains, like who would be holding gold in New York in the form of warrants, but not take it out? So that's the same with it, with the issuer of credit, which is the Federal Reserve, and no, the Federal Reserve isn't going to cut anybody off, but they'll stop. But the world is going to cut off the Fed, right? On top of the Fed itself, which is much more powerful than Warren Buffett, is the entire planet, which is even more powerful than the Fed. So when credit no longer works, that's when money it has to be used in trading, and that will end the silver manipulation, which goes back to 1873. That's what we're looking at.
While gold has been consolidating for roughly 4 months, a duration similar to past pauses since early 2025, Rafi Farber sees the recent tariff headlines as a key source of market turbulence. He explains that shifting reports on gold import duties created an environment of confusion, with expectations fluctuating between heavy inflows of bullion into the US and outright denial of tariffs. The volatility spiked when a Financial Times report revealed that 1 kilo gold bars, the most commonly traded form on COMEX and a major Swiss export to the US, were indeed subject to levies. The news triggered the widest premium of New York futures over London spot prices since the pandemic, sending December contracts surging more than $100 above global benchmarks. Farber also frames the issue in the context of global credit dynamics, likening the Federal Reserve to a dominant credit issuer that won't voluntarily cut anyone off, but could find itself cut off by the world. Above even the Fed, he notes, is the collective power of the global market. Recent U.S. inflation data added another layer to the backdrop, holding steady at 2.7% year-over-year in July, despite the imposition of import tariffs. With energy prices easing but food and goods costs still rising, analysts suggest the contained inflation pace strengthens the case for the Fed to cut rates as job growth slows. In Farber's view, such a shift in monetary policy could ultimately prove more consequential for gold and silver than tariffs themselves. Let's get back to the interview.
I believe that manipulators in the silver market are small fry.
Okay.
In terms of the people that are, let's say, spoofing the futures market and then selling or something like that to make a quick buck, I don't think that really matters that much with the price. I'm not saying it's great, and I'm not saying it's fine. I'm saying I don't really care about it that much.
Right.
The big manipulation in the silver market goes back to 1873. It's
Wow.
150 years old, and it's pretending that silver isn't money and the dollar isn't money. I would take over the Fed, I would stop the printing, and I would let everything collapse.
Yeah.
And then I would just, and the most important thing to do after that is do not intervene. Aside from very bare, basic law enforcement, try to stop looting and stop,
Like any
mass
anarchy.
murder. Yeah, just put, and maybe you'd need martial law in the big cities or something like that, and to fund it with, I don't know, a collection of millionaires and billionaires who can fund basic law enforcement or something like that. I mean, it's not pretty what's going to happen.
Right.
So you're asking me how to control it? I don't know. I just know it has to happen. I'm not sure when I watch the news, and I try not to, what is real and what isn't. But just the general feeling that I have and what I'm seeing from the little snippets is that there's war everywhere. Like everything's
Yeah.
erupting in war. There's Russia and Ukraine is just one part of it. There's Israel and Gaza, and Germany is falling apart. There's a housing crisis in Germany right now.
Never know what happens with China next. And
Yeah, there's China threatening to invade Taiwan. Iran is saying that Israel's about to bomb it again. It looks like there's Cambodia and Thailand now.
yeah, it's
I
crazy.
I mean, and I can't tell if this is all just part of the narrative to like confuse me, and none of it is actually happening. And no, I think some of it's happening. I can't tell what, and I don't really care anymore because I've
Right.
seen what they did in COVID, and I know that everything that they is based on something that's happening. I just don't know how much of it is actually happening. So.
Yeah, absolutely. Well said.
So I mean, it just seems like everything is falling apart. And this is what happens with a monetary system that falls apart, and what happens when it completely falls apart. I suspect it's going to be war for a while until they run out of reserves to bomb each other with, and then we'll figure out what we can do as a human race, and hopefully they run out of money before we run out of people.
Rafi Farber's analysis frames today's financial and geopolitical turbulence not as a series of isolated shocks, but as the product of an intensely fragile system that has been decades in the making. Short-term catalysts, such as gold tariff rumors, can trigger wild swings by choking market liquidity. Yet, Farber insists these are mere ripples compared to the tidal forces of fiscal excess and monetary decay. Silver, in his view, remains the most mispriced piece of this puzzle, its price long distorted by the big manipulation that began in 1873 when it was stripped of its role as money. That distortion, he argues, will only end when the global credit structure fails and actual money is once again needed for trade. This fragility extends far beyond markets. Farber views war, political chaos, and economic crises not as random events, but as symptoms and accelerants of a decaying monetary order. When the collapse comes, he believes it must be allowed to run its course, with intervention limited to the bare essentials of law and order. Tariffs, central bank maneuvering, and headline-driven crises may shift the timeline, but they will not alter the destination. The volatility we are seeing now is not background noise. It is the first fracture lines in a system whose foundation is crumbling. Farber's message is clear. The endgame will not be decided by policy tweaks or market optics, but by the unavoidable breakdown of fiat credit and the return to sound money. Those who recognize the mechanics of this shift are not waiting for confirmation. They are already positioning themselves in gold, silver, and tangible assets, knowing that when trust collapses, prices inevitably follow. If the foundations of our financial system are as fragile as described, how will you position yourself before the cracks turn into a collapse? If you found this breakdown valuable, like the video, subscribe, and share it with other serious investors who need to hear it. We'll keep bringing you the brightest minds in the markets and the insights you need to stay ahead of the storm. Thanks for watching.